Recently wrote an article about blockchain technologies and the war of the blockchain networks. And I got some feedback from my editor, and it was interesting feedback because he didn't understand quite a bit of what I was talking about. So I took this feedback as, like I always do when I write, as very constructive feedback, because there's often this problem of me understanding things or thinking understanding things and then not able to explain to people that haven't worked as much on this field as I have. And I think that's a big problem that we all have. Part of this podcast series is actually to clarify my own thoughts to a broader audience so that I can make sure that I know what I'm talking about here. So I want to use this episode as a good example for that it's maybe obvious for some people what blockchain technology can do. I think it's not obvious for most people what it can do, and I want to try to explain my thinking and what I was writing in that article. This is a Not Even Wrong podcast. It's July 16th, 2021. This is Krim Delco. For the day, the fund is down 95 basis points. The market's down 75 basis points. For the year, we are down 4.89%. The market is up 15.3%. We're underperforming by 20.2%. So I think before I go into the topic of today's episode, I just want to comment a little bit on the drawdown we had. This week was a very tough week for us. We started the Monday, we were up 4%. Now we're down almost 5%. We had a drawdown from 9% in 4 days. So we had 4 consecutive days of down days, and we are down 9%, which of course is certainly noteworthy and also concerning. Now, what exactly happened? I think the macro environment is shifting away from us again, in a sense that we have concerns about growth, we have concerns about inflation, we have concerns about supply chain, in particular shortage of semiconductors continues to grapple the auto industry, which is a problem for Tesla. I think there is definitely some issues on that front. We're not as much concerned for Tesla, but there is just still this sort of laziness in the economy that we're seeing every day when we go have coffee somewhere or try to book an airline ticket or things like that. Everything is, well, it takes longer because of COVID. And I think we're just going to have to live with this for the next couple of months until the COVID, what we call here at Orange Capital Partners, we call it the COVID privileges. People are drawing on COVID privileges. I don't want to work as much. I want to work from home. My excuse for being late is COVID. All that stuff is grappling the economy, and we're having issues with that. And of course, if you're exposed to high performing, high growth stocks that are priced to the point where they need to deliver high returns, then you cannot have COVID privileges in a world like that and justify the valuation. So I think some of that is being reflected in our portfolio, and we took this drawdown because of that this week. I think we had just maybe a reflection a little bit on problems like that. And how do we think about this long term? We are long term investors in a sense that we think in the next 5 to 10 years we will do at least 15% CAGR, if not more. This is our goal. Nothing has changed on that front. We are pretty sure we're going to get out of this COVID privilege slump that we're living in right now, just by sheer competition and the necessity to compete and perform. We've had an episode recently where we spoke about the risk of inflation, and we dissected it in 3 levels. One is the temporary inflation, that is adjustment of the value chain, or the COVID privilege problems that are grappling a lot of value chains. We believe that this is transitory. The number 2 is the deterioration of government institutions. That is a real problem. It will cause inflation. And number 3, we have innovation, we have disruption, which will be disinflationary. We believe that this third factor will outperform the second factor, and therefore we are not concerned about inflation. Now let's get to the conversation about blockchain. So I want to start with what is actually blockchain technology trying to achieve, and why are we so excited at Orange Capital Partners? Why are so many people in Silicon Valley excited about blockchain technology? Here's the way we see it. So we believe that the biggest power of blockchain technology is to become a register for facts in the world. Now, what does that mean? That means that, for example, if you have let's say agriculture insurance is a good example, where you have the problem is the farmer insures themselves against dry weather, and the insurance company pays if there's dry weather. The insurance company does not pay if there's not dry weather. How do you establish what is dry weather, and when is the insurance company going to pay and when not? Today, the way we function in the world is we have institutions such as insurance companies, we have legal entities, we have government entities, we have lots of what we call centrally governed entities. So top down, somebody basically decides, one person or one company decides, okay, it has been raining for 6 days in a row, or it hasn't been raining, etc. The farmer has recourse to that particular, let's say, entity. And maybe in an insurance contract, you can write down, okay, we are going to use the government of, let's say, Brazil. They will officially announce the weather of the last 30 days. And if they say that it has been dry more than 20 days in the last 30 days, then that constitutes a dry weather event, and therefore the insurance company has to pay. Now, in reality, the way usually this works is that you have the farmer then, let's say, go to that government entity, and they say, well, it has been dry for 25 days. Then they call the insurance company. They say, we want to be paid, and the insurance company either pays or tries to drag their feet and then say, well, the government entity has neglected on Thursday and Friday of this month. There was actually some rain. It just wasn't in that area where they measure, but for us, in our the way we look at it, there was rain, so it really it doesn't require us to pay, and so you have these types of situations. What blockchain technology can do through smart contracts is get rid of all of this. So what a smart contract is, it is an algorithmically defined contract which says if the blockchain, let's say the Ethereum blockchain, decides that in the last 30 days, 20 days have been dry, the contract automatically pays. The Ethereum blockchain will use what's called oracles in the blockchain world. So there will be data providers, for example, it could be the government, could be anybody, will say, okay, it has been raining on the 25th, it has been not raining on the 26th to the 5th, and then so on and so forth. The blockchain then, through consensus, decides if that's true or not. If it's true, it gets written into the blockchain. If it's not true, it will be also written in the blockchain as a non-true event. So the point here is that the blockchain, through decentralized consensus, is going to establish what is and what isn't. And that is the big innovation that we see at Orange Capital Partners. This is what we're so excited about. This is what I was trying to explain in my article about blockchain wars, because what I was trying to say in that article is that we have this ambition now to go from, let's say, Bitcoin towards a decentralized world of what is and what isn't. Facts and also legal situations can be defined in the blockchains, and there is no more fight, there's no more conversation, there's no more need to hire middlemen, there's no more need to pay transaction costs to lawyers, banks, etc. The smart contracts can just go on and trade on their own, execute and be activated or not activated based on what the data and the blockchains say. So this is, in a nutshell, what we envision. So we believe that what we call the internet of values, or the internet of facts, versus the old internet was the internet of information. So there was information flowing around the internet, but nobody had assurance that the information is true, that the value is true, or that whatever information is being going from A to B has legitimacy. It was very difficult, still is very difficult, to realize, okay, is this information true or not? This is changing with the blockchain technology. In the blockchain technology, we can actually authenticate information. We can't say this is real, this is true, this is not true. We've done that with Bitcoin. We've taken one of the most difficult things in sort of the validation world, which is money, and we've created digital money. So Bitcoin has solved the Byzantine generals problem, and therefore made it possible for a decentralized consensus mechanism. We can go from there now and create a blockchain technology with smart contracts that can take care of many problems in the economy, such as, like I just said, for example, agriculture insurance. We can have the origin of products. Again, let's say a merchant can ship organic coffee from Peru. They can establish a certain code for what that is. The blockchain can validate it, and if it's validated and then being shipped, then the receiver of that particular product has insurance that this is actually really what they're buying, and they don't have to go and validate again and make sure they're not being screwed and all that stuff. So this is the big potential. We've had a conversation with Silvio Micali from Algorand about this. He's a decorated professor for computer science at MIT and also founder of Algorand, who is trying to solve what he calls the trilemma of the blockchain technology world, which is decentralization, security, and scalability. And the scalability is the biggest problem, which is that we can have all these nice decentralized features of blockchain technology, but it's very expensive to maintain those blockchains. And what Silvio is trying to do with Algorand is make it cheaper through some mathematical tricks, through some software algorithmic tricks, and also just more efficiently establishing the blockchain technology. Through all these things, he's actually attempting to make it much more efficient and scalable in terms of how many transactions per second can be validated through the Algorand blockchain. So this is just one blockchain. There's other blockchains that are competing. Ethereum 2, which is the attempt by Vitalik Buterin and the people around Ethereum to make Ethereum a stake-based, faster, scalable, low maintenance network, and also Bitcoin has certain potential to become much faster and much more scalable, in particular through independent networks such as Lightning, etc. So the idea, in a nutshell, to summarize, is my article that I wrote, The Blockchain Wars, which should be published in Neue Zürcher Zeitung probably in about a month. It's about this attempt now from Bitcoin, Ethereum, Algorand, and many others to create a blockchain which is scalable, secure, and decentralized. So we have no central entity deciding what is and what isn't. It's scalable in the sense that it's low cost maintenance, and it's also secure, of course, that you can't hack it, you cannot have Sybil attacks and all these things that are dangerous for blockchain. So, for example, one person taking over the blockchain and starting to imprint what is and what isn't, or sabotage things that are important to them and or not important to others and whatnot. Like all these things. What we want is a system where no central entity has the right to say this is true or not true. It's decentralized and therefore more true because only through a decentralized, competitive, game theoretic mechanism of consensus making, which is the solution to the Byzantine generals problem, only through that process we establish the truth. We hope that that is more true than if one central entity decides what is true or not. So again, the question of has it rained in Brazil in the last 30 days, that can be answered by the government, it can be answered by one person, it can be answered by a company, or it can be answered by a decentralized blockchain where people have an incentive to vote for the right thing, for the truth. And if we have an intelligent system that is scalable and has that game theoretic component in it where you have an incentive to do the right thing, if we can design a system like that, then we have a better chance to have, first and foremost, more truth than non-truth. And also, it's much more fair in the sense that nobody has the power and the ability to move facts away from the truth in their favor. And so this is the fundamental potential of blockchain technologies. The war is the competition between all these new blockchains. For us at Orange Capital Partners, this is very exciting. We haven't invested much other than bought some coin like Algorand and Ethereum. But we believe that there is enormous potential here. It's a bit like quantum computing. We still have to wait and see to see investable opportunities, but it is definitely an interesting area. And I wanted to use this episode to explain to my audience and also to myself exactly what this opportunity is. Thank you.